Hello, this is Dave, and welcome to Equity Story. I'm with the great Wolfie, and this is just a general share advice and not personal advice. And Wolfie, we've got live tonight with the Ocelot. He's all excited, ready to go. So please, if you haven't come on to live, you need to come on to live. I mean, live is great. Ask the questions. There's no reason for you to be sitting there worried about a stock in your portfolio. You've got to come on, and we've got to look at it, and we've got to discuss it. It's so important.
Exactly.
Together, hopefully we're stronger, right? It's simple as that. And Wolf, I've also say we're working this Saturday, don't you?
Yes, we've got our CTM on.
Yeah, Cincinnati event. So possibly the last Cincinnati event this year. I think it is actually, Wolf.
Yes.
And so if you want to learn how to trade, you want to have a plan, and you want to take this game seriously, come and do the.
There's two things always to this, right? First of all, if you want to make some money, come and see us. And if you want to protect your money, come and see us, because it's exactly what this course does.
Wolf, let's talk about Magellan in a downturn. So the founder, he's diversified.
Yes.
He's doing it at $9.20. Why didn't he diversify at $60?
Oh, Dave, things changed for him in 12 months. I mean, talking about a excuse of diversification. I mean, it's not a good sign or confidence booster when Hamish Douglas sells out at $9.30.
I don't think.
When if you think you're a good investor, good fund manager, and you do have diversification issues, you'd do it at the top of the market, wouldn't you?
I don't think old Chris McKay is going to be too happy. His old partner, who's
oh my god,
but okay. Anyway, at least I have worried about him. I have, but now I know he's got 118 million in the bank. I think he'll be all right now.
Yeah, I'm sure they will be all right. Yeah, it's just a strange, obviously, diversification at this price. There's more to it.
All right. You're just jealous, Wolf.
Yeah. Well,
right.
I had that money on my account to diversify.
So Oz4X that
yes.
we've been in since, and it hasn't broken our stop loss. Now, if it was we put it on, I think it was in May. So 5 months. We said it'd be a 3-month trade. It turned out to be a 5-month, but it's hit profits for us, Wolf. Just gone up to 290. So, and again, fantastic performance in a really tough market. Good story, held trend, bounced off the trend line, bang, hitting profits. Another winner for our little trades that we put on the week. What did you make of it,
Dave? I mean, the results were fairly good, and there was an upgrade in there. So dare I say, there's another trade in this right now, possibly.
Okay, let's have a look at on Friday.
End of the week, maybe, maybe wait into the week. But that, on the back of an upgrade, on the back of their performance and the way things are looking for them in this particular market, I could see this going high. It's not cheap story, so I would not be buying this for like a value type story, but for a trade, potentially.
So, okay, so arguably, if you're in it, you're holding it and you're just lifting your stop.
Yeah, unless you want to take your profits and start again, potentially, right?
Okay. Well, yeah, because you've got to keep to your plan, haven't you?
Yeah, that's right. That's right.
Because it will have a bit of resistance at that $3. It might go up a little bit, play around here next week, and and then it's done a bit of an exhaustive pattern. So I think it's the right move.
And we'll reassess by the end of the week, right? We'll go through on that on Friday. Go, okay, well, is there another trade in this? Not, but fundamentally, when you look at those numbers, look at the upgrade, I can see another trade.
Wolf, James Hardy, like it's been in a downturn really since it broke 50, but look at that. If it looks like that by the end of the week, we're going to go lower again, aren't we?
It's definitely going lower, and I tell you why. Is because the update today was pretty poor, and they said things are looking pretty weak in all its 3 regions. And this is a building materials company, and we are now heading into recessions globally. This is going lower. So if you're in this, it's your last chance.
This will be one of those stocks
they'll probably get back to $20.
Yeah, the shorters will be jumping on, I should think.
Absolutely.
Now tell me about TLC, because it's another lottery play. Now, how does this differ from Gin, Jumbo? It's obviously a lot smaller, right? It's a new play that's come on the market.
There are very close similarities. The only thing is that Gin is a reseller, right? So it resells the lottery tickets and so on. TLC is the primary seller. Gin is the third-party seller, so they just resell the tickets for.
So TLC don't have that risk, whereby.
Correct. You can just pull the contract off. Whoever you're selling, the third-party selling for someone else's tickets. If they lose that contract, there goes the business for Gin, so to speak. However, they've been obviously re-signed it, I think, so they're okay.
But that's always been a risk for
Correct.
Gin.
Correct.
So why would not Gin buy TLC?
Oh, because TLC is much larger than Gin.
Okay, now you're talking. Now you're talking, Wolf. Now
that's why now that Tabcorp and obviously lotteries business have been separated, so they demerged. You've got one big entity just solely concentrating on the lotteries business. The Kinos of the world, the Lottos, the Powerballs, you name it. So I think, if anything, the lotteries could probably have a look at Gin, right? But you think to yourself, you've got two businesses that are sort of similar to its way, and the lotteries can probably do what Gin is doing, right? Online ticket sales, possibly eat into Gin's breakfast, or lunch. So I'd look at, for me, the quality obviously is here with lotteries.
Yeah, and what you're saying, there's possibility. We've talked about it. They could be delivering it's one to have on your watch list, because if you can get a good dividend out of them, it's we know certainly that it's a huge part of the Australian psyche is gambling.
Yeah,
I think
100%. So what's going to happen is resilient, right? Doesn't matter war, famine, droughts, people will still gamble away, buy a lottery because they think they can get rich. It's just us, right? This is our culture. It's probably global culture anyway. People, when they see a big lotto win, they go and buy a ticket. So it should be resilient through thick and thin. And if they can give a dividend with a bit of growth, this could be a great little story to have in a portfolio for the dividends. So I'm going to watch it for the next. It's only been recently demerged, so it's only been around 6 months. Probably needed to have a look at it at February when they release half-year results, and then we'll take it from there. We'll know a bit more about the dividends, everything else.
Wolf, GT1, early days sort of lithium play. They had an announcement today. What are you liking about this one?
Well, it's just more results. I was actually quite curious to see how this is going, how these things are going, right? Whenever there's a lithium results, I always go click on it. I want to have a look what they're coming up. So I'm sort of with it. I can understand what's actually going on. Market cap 253 mil, just having a look at that. There you go. So they've come up with the 6 holes have returned as of today 14 meters at 1.53. That's decent from 13, right? 14.4 at 1.3 from 21. So there's something there to sort of go, okay, interesting.
Okay, not too bad.
That, yep. But that leads us to the next thing I want to have a look at, Dave. I want to have a look at the 5 Macquarie lithium stories and what they say about these stories, because of course lithium is quite hot. I've got these stories anyway on my list, right? Of stories that to look at and compare. But I just want to talk about through, because some of these price targets are eye-watering from Macquarie. So should we go through them?
Yeah, go on. Let's have a look. Let's start with IGO.
All right. So IGO, we've got Macquarie coming, and they're obviously, a little bit bullish, Macquarie for lithium, and the price target is $21.
Nice. A nice sort of 25%. Now, Wolf, I had a look at this one with you. It's got a buy signal on the daily. So if it looked like that by the end of the day, I could understand maybe some of the shorter term day traders having a little bit of a trade with IGO.
Yep. Next one, CXO.
Yeah.
All right.
Again, sort of. I had the buy signal a few weeks ago and gradually edging up slowly, isn't it? On the way back to that 160. So what's the target price on CXO?
All right. So the target price. I remember they had just redone all the numbers on lithium. That's why they're coming up with these updates. from 170 to 190.
Okay, very
Okay.
nice.
Yep.
Okay, right.
Pretty bullish.
A mineral which we traded and we took a little bit of a profit.
Yeah.
I think the logic was maybe that 80 cents, a bit of resistance, but have we
Are you
been
ready? And now this is gonna probably floor you. $125.
Yeah. Well, are they factoring in that they might separate the assets in that
No.
valuation?
No, not at all. They are accounting that they're actually going to have it, and they just all they're doing is looking at the lithium picture, how bullish, how good the assets are, the production profile, and what the valuation will be on their assumptions. I mean, that's what the idea is here. The separation of the two assets. If it happens, it happens. But I don't think they're going to count that in. This is all about right now how it stands. 125 bucks.
No, I'll take it. I'll take it, Wolf.
Yeah. So you think they might be trading this if that's true?
Well, listen, I think so. And we are, I mean, a lot of these we've got on at the moment and people are trading them. CXO's on the other day with that buy signal. I think people are still in it. We had that breakout, didn't we, with IGO on Einstein. So I think we've got a lot of people in them. But what I would say, if they're on Einstein's on Sunday, or you see these stocks on Einstein's, get in. Yeah.
Yep. Especially in that hot sector of, say, lithiums, right, of the world, because there's probably going to be something happening like upgrades or prices going up. The market is pretty clever when it goes to trading, so they are usually ahead of the curve. All right. Anyway, let's go to the next one. Liontown LTR. So this one, okay, going from 250 to 340.
Ooh. So this is actually the best upgrade. Well, this is up there with mineral, right?
Yeah. 340.
I mean, it's got that resistance of 2. I mean, I could argue the case if it breaks above $2 and stays there, we're buying it, right?
Look, together, CXO and LTR, they are the two of my favorite stocks in Australia on the back of the next mining for lithium stories, right? So they are still in development, those two. The other 3 are producers. That's why there could be potentially that upside that they're talking about with the CXOs, LTRs, because if they can hit the ground running with their mines, they've got some nice resource as well in their portfolio. So potentially, that's why they're looking quite good.
Well, if you look at LTR, it's on a $4.5 billion market cap.
Yes.
And you've got PLS on a 16 million. So, I mean, what you could understand why it could easily double, right?
Yeah, that's right. Exactly. As long as you're bullish on the assumptions of lithium, right? That's the idea here. Yes.
Okay.
And the last one, and that is PLS, which is part of our top 10, right? That we had. So we've done very well with it already. And they are moving their price target from 560 to 770.
Okay. And again, if you look at the chart, it looks fine. And again, that daily, I mean, you could just, these lithium plays, they're so bullish, you could just play them really off your daily charts and just buy them off the daily and hold them.
So which is your favorite chart? May I ask? Which one did you buy? The buy signal on IGO?
I think so. IGO, we know it's a good company, it's well-rounded, but I like your ideas. I like CXO LTR for a bit longer term, Wolf, because I suppose you've got that natural catch up as they become producers, haven't you?
Right. However, you've got the risk of if they build their mine, it takes 1 or 2 years, and the price of lithium eases. That's the risk, right? So they're not going to have cash flows until probably 12 to 24 months away, which is the risk here. But yeah, there's a catch up possibly here. So if the prices stay stronger, you could see a much stronger move. Yes.
Wolf, just say Osforex hit their target. A2 milk is starting to go. Hopefully on the way to that $6. WDS, I think, has hit its target. So Woodside is up there for us, which again looking very, very good. So good to see another good trade. Car is breaking out and looking. Newcrest likewise. I think you've seen gold looking quite good and hopefully get up to that sort of $20. And DEG had that breakout yesterday as well.
Yep.
And again, starting to look good. So very pleased, Wolfie, with in a very, very difficult market with the sort of little trades that we've been putting on, or the ideas that we're putting on.
Yep.
So I'm very pleased. Now, Wolf, absolutely brilliant. So some really interesting ideas there, Wolfie. Thank you to your genius to buy on Lithium. A stock that we liked last year, and this unfortunately really got smacked with the whole downturn of tech stories, but you know what, hats off, Wolf, because it's held up reasonably well compared to a lot of them, right?
Mhm.
So I was in IMAC on Friday, and who did I bump into but Mat Ratty, the CEO?
Mhm.
So I grabbed him a beer, got someone to put out the camera, and basically said, film this, right? And try to get an update from him.
Mhm.
So what I thought I'd do is just play this, and now the sound isn't brilliant, yeah.
Oh God, boozy lunch interview. This could go anywhere.
No, there wasn't any lunch. It was just alcohol.
Even worse.
Well, that's how I got him to sit down. I said, "Come and have a beer," and he said, "Dave, what's that camera?" We're just going to film a little bit. Don't worry about it. But he was very nice. It was quite funny actually, because we're filming, and he looks like Tom Cruise. I think everyone thought he was. So this is how it went, and maybe what he did, he gave some really good giveaways with AV1. In that giveaway was some really interesting big ticket
I hope
share.
you're not getting into trouble giving us some stuff that's not actually released to the market.
Well, mate, that's why I gave him beer. No, I don't think so. He wouldn't do that. They have checked it, but he didn't.
Okay, good.
Because
you know, when you're drunk, you go, "Oh yeah, we're gonna get 100 million revenues."
Well, but he's got a lot of interest in. He also told us, and I'll wait till to come when he's going to be cash flow positive.
Okay.
All right, let's go.
Hello, this is Dave, and welcome to Equities Story. Welcome, and I'm here at Darling Harbour for the IMARC presentation, and I was just coming down to have a beer. And who do I bump into but the CEO of AV1, the great Mat Ratty. So I thought we'd take this opportunity to find out what's happening at AV1, and to find out a little bit as well, which is exciting me, that recent raise they did, where they raised another $3 million, higher than their existing share price. So welcome, Matt. How you doing, champion? Good?
I'm very well, thank you.
Can I be honest? I was incredibly surprised. It's the first time I've seen it this year. A company's trading at 9 cents. You raised $3 million at 10 cents. How did you do that?
Through a lot of hard effort, really. So I guess it really comes down to the existing register, right? So the existing register is backed by 9-time rich lister Mark McConnell, as you know, is a non-executive director on our board. But also, we've got a couple of billionaire family groups which has just joined our register as well. So you would have seen that there was a substantial shareholder notice by Carrington Property Group, which is a prominent family over in Canberra. They've done really deep due diligence on this technology, done deep due diligence on the company, the financials, but also like the clients that we are attracting sort of attracts good capital as well. So we've got clients like William Hill, Disney, SoFi, major NASDAQ listed companies now joining the register of Traffic Guard.
So you've got now sort of very, very wealthy people on your registry that are investing in AV1. You raised $3 million. Could you have raised 10? Could you raise 12? And why didn't you raise more? Why did you only raise $3 million?
Sure. So firstly, there was demand for much higher than 3 million. The reason why we didn't take it is because we're looking at the share price at the moment, and we're thinking, well, we're significantly undervalued from our internal perspective. But also, we didn't want to be that company that just took all the money that it could get, right? Because what I've always found is that CEOs who do that, or companies that do that, then start to make unforced errors. They start to spend in areas where they shouldn't be spending. So if you look at everything that we've done to date, it has always been around about that $3 to $4 million mark at any one point in time, knowing that we can call on our existing register at any time to go and top it up when we need to.
So that's really nice. You didn't want to raise more than you had to because you feel confident with the revenue growth that you're going to get that share price higher over the next year.
No doubt.
Now, my question is, how happy have you been so far this year with your revenue targets? And I suppose, what's been working for you, and maybe also what's been working against you? And I know the world is getting a little bit tougher at the moment. You know, Google's finding it a little bit tougher.
Yeah.
How much of sort of the difficulties Google's have you noticed that with a little bit with AV1?
No. So if anything, like...
So you said no, not at all.
So if anything, the market is wanting to give us money, right? So I made a release the other day saying that, you know, as part of this raise, we're hiring the right people in the right positions. So we've got about 60 companies in our integration phase at the moment. So, you know, assuming our pipeline at the moment, we generate around about 50% of those trials go through to paying customers. So that's 30 paying customers that are actually waiting in our pipeline at the moment. That's obviously could double our revenue line overnight with a single product. So we haven't seen a slowdown, and if anything, we've seen an uptick, right, in demand for this product. Now it's on us as a company to hire the right people in our integration phase, which is what we're doing now, to get them live in order to get them through to paying customers. But we have seen no slowdown whatsoever.
That's great. That's fantastic. So when you look at Google, they've got all the companies in the world that advertise through Google. It's an incredible platform. How close are you, and are you the number one person that Google goes to now? Is TrafficGuard the number one company in the world that Google will go to protect people's security when advertising through their platform?
So we are the only verification, PPC verification vendor on the marketplace, which makes us a preferred partner. I'm not too sure if we're the only one, but certainly the relationship with Google that we have is extremely strong. So part of that pipeline, by the way, that I just spoke about, is actually leads coming from Google. Right? So our relationship's better than ever with Google. We're working hard with them to try and get these things through the pipeline. And obviously it's like when you get these ones through the pipeline, you start to prove it out. It starts to become, you know, like a further funnel being built by Google themselves.
So you've got 60 companies now that you're just waiting to get through the pipeline, which could potentially double your revenue. And at the moment, from memory, you're on about 3.3 million recurring revenue. So if you get those through, you're on about 6.6.
It'll be above 6, yeah.
Does that make you cash flow positive? It's like 2024. Midway through 2024. Matt, listen, it's an exciting company. The tech side of the market, we know, I mean, we've seen tech stock after tech stock get hammered down. AV1 has held up really well in a difficult time, and I think that's a credit to the business model. It's a credit to your relationship with Google, which is getting stronger and stronger and stronger. And again, we saw people like Disney come through, unbelievable. And I think, dare I say it, you're still, it's not our company, but you're still under the radar, and a little bit. And I think, again, we're happy to get your story out there to all our members. And hopefully, those of you who don't know AV1 can get on, look at it. You're nearly trending, nearly over the trend line. So then we get more excited. But no, it's a great story. We're excited. And thank you very much for taking the time to just tell us what's going on. And it's all sounding good, champion. So cheers to AV1 and have a lovely day.
Thanks, guys.
There it is. There was Wolf. You know what, Wolf? Can you hear?
Yes.
He does very well, doesn't he? For a CEO of a company, he's got no wrinkles.
No, he's very young.
He is. He's 34. When I first met him, I thought he was about 12, and I thought he's maybe one of these like genius child prodigies, right? He's going to be, but anyway, Wolf. The interesting thing from the talk, right, which I got out of it, he's got some very wealthy families. He said, I think two of the wealthiest families in Australia on the registrar, happy to bankroll him, who like the business model, happy to bankroll him and have got that long-term view. Don't you think it was clever how I doubled 3.3 and made it 6.6?
Oh yeah. But anyway, look, I think what I get out of it, pretty much is things are still going okay. You know, there's definitely growth there, and you just got to be patient. I mean, that's the idea here. And I love the fact that he answered the question of not raising much more money, because it does tend to make you go, oh, well, I can just put the money there. You're basically wasted, right? So if you've got a little bit less money, you have to be a bit more careful with it, right? So it makes perfect sense. I understand that, plus the dilution and so on. So I like that answer from him. Anyway, good to see he's going well. Like, you know, at the moment, obviously the market just doesn't care too much with companies like this because of, you know, the tech problems. But, you know, eventually maybe 12 months down, 18 months time, we'll see it a little bit different and we'll see a much higher share price.
Yeah. All right. Thanks for that, Wolfie. On that note, Wolfie, listen, thank you very, very much, and have a wonderful day, and I'll see you later, Wolfie.
All right. See you tonight.
7 o'clock live.
Yes.
Bye, mate. Bye.
Bye.